When narratives collide with reality and markets quietly reposition before the crowd notices, it becomes essential to understand not just what is happening to XRP, but why the next move may not look like a rally or a crash, but something far more structural, a price reset that could redefine how this asset is valued going forward. What we are seeing right now is not noise, not short-term speculation, and not a headline-driven spike, but the early signals of a recalibration that matters deeply to anyone paying attention to crypto markets as a whole. To understand why the idea of a price reset is even on the table, we have to step back from daily candles and short-term sentiment and look at how XRP has existed in the market for years. Unlike many digital assets that rose and fell purely on speculation, XRP has always lived in a strange middle ground between utility, regulation, and investor expectation. It has been one of the most widely held tokens globally, yet one of the most constrained in terms of narrative freedom, largely due to its long-standing legal and regulatory overhang. That overhang shaped price behavior in ways that distorted natural price discovery, compressing volatility at times and exaggerating it at others. When markets operate under constraint for long enough, they don't simply resume normal trading once the pressure lifts. They reset. A price reset does not mean a sudden collapse, nor does it automatically imply a vertical surge. It refers to a re-anchoring of value, where the market collectively reassesses what an asset represents, how it should be priced relative to risk, and where it fits in a broader financial system that itself is changing. XRP is approaching such a moment because several forces that have held it in an artificial state are shifting simultaneously. Regulatory clarity, institutional posture toward blockchain payments, and macro-level liquidity cycles are all converging in a way that makes the current price less relevant than many people assume. One of the most misunderstood aspects of XRP is how tightly its market behavior has been linked to legal uncertainty surrounding Ripple and the prolonged scrutiny from U.S. Securities and Exchange Commission. For years, the market priced XRP not just on adoption potential or transaction efficiency, but on the existential question of whether it would be allowed to function freely in key jurisdictions. That kind of binary risk suppresses rational valuation. Capital stays cautious, institutions hesitate, and price action becomes range-bound or erratic. When that risk begins to resolve, the market does not simply continue from where it left off. It recalculates. This recalculation is happening against a very different macro backdrop than the one XRP last experienced during a full speculative cycle. Global liquidity conditions are no longer defined by emergency stimulus, but by selective tightening and cautious re-expansion. Interest rates, bond yields, and currency stability all matter again in a way that they did not during the era of unlimited easing. In that environment, assets that claim real-world financial utility face a higher bar, but also stand to benefit from clearer differentiation. XRP's role as a bridge asset for cross-border settlement places it squarely in that category, which means its valuation framework is shifting away from meme-like speculation and toward infrastructure-style assessment. Another critical factor behind a potential price reset is the mismatch between XRP's supply dynamics and how the market has historically interpreted them. Large headline numbers around total supply have often dominated discussion, while the actual circulating behavior, escrow releases, and institutional flows received far less nuanced treatment. Over time, this led to a persistent undervaluation in the eyes of some and overhang anxiety in the eyes of others. A reset occurs when the market stops reacting emotionally to supply figures and starts incorporating them analytically, understanding not just how much exists, but how it moves, who uses it, and under what conditions demand meaningfully increases. We are also entering a phase where the broader crypto market is maturing in its internal hierarchy. Not every asset will be valued on the same basis anymore. Some will exist primarily as stores of value, others as execution layers, and others as financial plumbing. XRP has always claimed the latter role, but the market has not consistently priced it as such. As institutional pilots, payment corridors, and blockchain-based settlement experiments quietly expand, the gap between narrative price and functional relevance becomes harder to ignore. When that gap grows too wide, markets adjust abruptly, not gradually. It is important to emphasize that a price reset is emotionally uncomfortable for many participants. For long-term holders, it challenges anchoring bias, the tendency to fixate on previous highs or familiar ranges. For short-term traders, it disrupts technical patterns that rely on historical behavior that may no longer apply. But for the market as a whole, resets are healthy. They clear distortions, reassign risk, and create a foundation for more sustainable movement. In XRP's case, the reset thesis is not built on excitement, but on normalization. As we move through this discussion, the key question is not whether XRP will move, but how and why that movement might differ from what most people expect. Is the market prepared to price XRP as financial infrastructure rather than speculative leverage? Are participants ready to let go of outdated reference points and reassess value based on present conditions rather than past frustrations? These are the questions that define resets, and they are becoming increasingly relevant right now. This brings us to the mechanisms that could actually trigger such a recalibration, the specific developments and structural changes that turn a theoretical reset into a real one. Those mechanisms are already forming beneath the surface, and understanding them is essential if you want to interpret the next phase of XRP's price behavior with clarity rather than emotion. Let me be very clear as we move into this next section, because this is where abstract ideas turn into concrete mechanisms. A price reset does not occur because people suddenly change their minds. It happens when structural triggers force the market to reevaluate assumptions that have quietly guided behavior for years. In XRP's case, several of those triggers are now active at the same time, and their combined effect is far more important than any single announcement or price candle. One of the most powerful reset triggers is the shift in who participates in the market and how they participate. For a long time, XRP trading was dominated by retail sentiment cycles, derivatives speculation, and reactionary positioning around legal news. That type of market produces exaggerated moves but shallow conviction. What changes the equation is the gradual entrance of participants who do not trade headlines but models. Payment firms, liquidity providers, and institutions experimenting with blockchain settlement do not buy based on hype or sell based on fear. They allocate based on cost efficiency, reliability, and regulatory viability. When that type of capital begins to influence price discovery, the old trading ranges lose relevance. Another trigger lies in the evolving interpretation of utility itself. For years, utility was treated as a future promise in crypto, something to be discounted heavily because it had not yet scaled. Today, the conversation has shifted. Financial institutions are no longer asking whether blockchain can be used for settlement, but how it can be integrated without disrupting existing systems. This subtle change matters because it reframes assets like XRP from speculative experiments into operational tools. When markets start pricing an asset as infrastructure rather than optional upside, valuation frameworks change, multiples compress, volatility behavior adjusts, and price finds a new equilibrium that reflects steady usage rather than explosive narratives. Liquidity structure is another underappreciated factor behind a reset. XRP has historically traded with fragmented liquidity across exchanges and regions, often reacting sharply to localized demand or supply shocks. As liquidity becomes deeper and more evenly distributed, price behavior naturally smooths out. This does not mean the asset becomes stagnant. It means that price moves are more likely to reflect sustained demand trends rather than short-lived bursts of speculation. When that transition happens, the market often experiences a period where price seems disconnected from expectations, frustrating both bulls and bears until a new baseline forms. We also need to talk about the psychological reset that occurs when long-standing uncertainty fades. Markets are surprisingly bad at repricing assets incrementally after prolonged periods of doubt. Instead, they tend to overshoot in pessimism and then correct abruptly once clarity arrives. This does not always look dramatic on the chart. Sometimes it shows up as stubborn consolidation where price refuses to behave as traders expect. That consolidation is not indecision. It is the market recalibrating risk models, updating probabilities, and absorbing new information that no longer fits old assumptions. Macroeconomic context adds another layer to this process. In a world where capital is no longer free and risk is priced more carefully, assets that can demonstrate efficiency gains in real financial workflows gain quiet appeal. Cross-border payments, liquidity optimization, and settlement speed are not glamorous topics, but they are increasingly important in a fragmented global economy. As these pressures intensify, assets positioned in this space are evaluated less like lottery tickets and more like cost-saving tools. That shift does not produce instant price explosions, but it does lay the groundwork for durable valuation resets. It's also worth noting that resets often confuse participants because they do not align with emotional narratives. Many expect validation to look like a rapid return to previous highs or a dramatic breakout that feels rewarding. A true reset often feels anticlimactic at first. Price may move sideways, grind slowly, or even dip as weaker hands exit and stronger, more patient capital accumulates. This phase tests conviction not by fear, but by boredom. Those who mistake it for failure often miss the larger transition underway. As these triggers interact, the key insight is that XRP does not need a single catalyst to reset. It needs alignment. Alignment between regulation and usage, between liquidity and demand, and between narrative and function. That alignment is what turns years of suppressed or distorted price action into a new reference point that the market can actually trust. Once that reference point forms, future moves are judged against it, not against historical frustration or unrealistic expectations. The next logical step is to examine what a reset might realistically look like in practice and how investors and observers can distinguish a healthy recalibration from mere stagnation or manipulation. Understanding that difference is critical because it shapes decision-making during periods when price action feels counterintuitive. Respected viewers, as we move deeper into this discussion, it becomes essential to separate perception from process because a price reset rarely announces itself clearly. It unfolds through behavior, through shifts in volatility, volume, and market reactions that only make sense when viewed together rather than in isolation. For XRP, recognizing what a reset looks like in practice can prevent costly misinterpretations during a phase that often feels confusing even to experienced market participants. One of the clearest signs of a reset in progress is a change in how price responds to news. In earlier phases, XRP was highly reactive. Legal headlines, exchange decisions, or speculative rumors could trigger outsized moves in either direction. During a reset, that sensitivity fades. Price begins to absorb information rather than amplify it. Positive developments may result in muted reactions, while negative news fails to produce the sharp sell-offs people expect. This is not apathy. It is the market signaling that its internal valuation model has changed, that marginal information no longer carries the same weight it once did. Another practical marker is volatility compression paired with persistent participation. Many assume that declining volatility means declining interest, but in reset phases, the opposite can be true. Volume may remain steady or even grow while price ranges narrow. This suggests that accumulation and distribution are happening at a more deliberate pace, often between participants with longer time horizons. Short-term traders find this environment uncomfortable because familiar patterns break down, but for the market, this is a stabilizing process, not a weakening one. Price structure also begins to matter differently during a reset. Traditional resistance levels tied to past highs lose their psychological power, while new zones of acceptance form through repeated trading activity. These zones are not defined by dramatic breakouts, but by time. The longer price trades comfortably within a range without extreme rejection, the more meaningful that range becomes as a reference point. This is how markets quietly agree on value before expressing it more openly later. It is also important to understand that resets often involve internal rotation rather than external inflows. Capital does not always rush in from the sidelines. Instead, ownership gradually shifts from speculative holders to participants aligned with the asset's evolving role. This transition rarely shows up in headline metrics, but it influences how price behaves under stress. Assets undergoing a healthy reset tend to show resilience during broader market pullbacks, not by outperforming dramatically, but by refusing to break down easily. For XRP specifically, this phase intersects with a broader redefinition of its identity within the crypto ecosystem. As the market matures, narratives consolidate. Assets that fail to clarify their purpose lose relevance, while those with a defined role are judged more critically, but also more fairly. XRP's positioning around payments and liquidity efficiency places it in a narrower lane, which limits speculative upside in the short term, but strengthens its case for a more stable valuation framework. That trade-off is at the heart of the reset concept. This is where many observers get frustrated. They expect progress to look exciting, to feel validating. Instead, a reset feels quiet. It feels like nothing is happening, even though something fundamental is changing. Price may underperform flashier assets during hype-driven phases, leading to doubts and second-guessing. But underperformance relative to speculation is not the same as underperformance relative to utility. The market is simply using a different yardstick. Another subtle but telling behavior is how XRP trades relative to broader market moves. During a reset, correlation patterns can shift. The asset may decouple slightly from purely speculative cycles, reacting less aggressively to broad risk-on or risk-off moves. This does not mean it becomes immune to market sentiment, but it does suggest that additional factors are influencing price beyond simple momentum chasing. For long-term observers, these shifts provide clues that a recalibration is underway. All of this underscores a crucial point. A price reset is not a moment, but a phase. It does not reward impatience, nor does it punish caution. It simply reshapes expectations. Those who insist on viewing XRP through outdated lenses often misread this phase as stagnation or suppression. In reality, it is the market doing what it always does when conditions change, updating its internal logic. The final piece of this discussion is forward-looking. Once a reset phase matures, what comes next, and how should viewers think about positioning themselves mentally and strategically without falling into hype or fear? That is where clarity truly emerges. If you'd like me to continue with part 4 and explore the implications of a completed reset and what it could mean going forward, just say continue.